Today we're going to go over some simple tips to help your trading. Stay tuned, traders. We'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. Today we're going to go over some simple tips that will help improve your trading. I get a lot of emails, I get a lot of questions, I get a lot of comments on YouTube asking me some simple things. Today I'm just going to go over some really basic framework ideas that I apply each and every day to my trading. As you go through your trading day, you're going to learn things every single day. We talk about this, getting the 7-step daily routine for high performance traders. If you haven't done so, go to my homepage, download it. It's an audio file. You can take it wherever you go, listen to it, use it as a framework to build your own daily routine, to bulletproof yourself, to build confidence, discipline, and a winning mindset to master the markets. First thing you need to work on, or you definitely want to be honing your skills, is having your trading plan. Now, I've talked about switching the bulk of my trading to end of day. I still do use a couple of my hourly systems, but one of the key aspects is that I've simplified that down to basically 2, maybe sometimes 3 simple trades that I look for. Part of the reason why that is that they show up over and over again. They're easy to duplicate. I can use the intraday one based on the London Open or the US Market Open, so it's set to a certain time of day. I know what my maximum stop loss is, and we'll talk about that in a second. But part of the reason is if you can simplify things, if you're trying to trade multiple types of trading systems using indicators or different things, what that can lead to is analysis paralysis. You get too much information in your head. If you're following too many currency pairs and looking for different types of system setups, unless you've got automated program trading, it gets very confusing and difficult, but it also is hard to monitor your results. So number one, have a plan. The second part of that is to follow your plan. Now, I've been guilty of this in the past where, I have talked about doing my back testing, having a really simple strategy, and then once Monday morning would start, I would just be taking random trades. And that would often lead to some heartache, because what would sometimes start off as a simple little trade would balloon into a bigger loss, averaging into a losing trade, moving a stop, again, not following the plan and looking for your best trade setups. Number 3, have a daily trading routine. Now, we talk about this in the high performance daily routine. It's really critical to have a simple approach to filtering and scanning the instruments that you're trading, being able to go through a process, keeping some journaling notes, whether you're trading end of day or intraday, but structuring that daily routine. And again, as you continue to trade and evolve, and if you have a simple process in place and it's reproducible and duplicatable, it's easy to do that day in and day out. But as you go along, you're going to learn new things, perhaps in terms of how to maybe simplify that or to make it better, or little things that will help you hone that and tighten up your trading skills. But having that daily routine is critical. Number 4, always use stop losses. I cannot emphasize the importance of this by itself. As retail traders, we are susceptible to a minefield of emotional and mental trading hurdles. I've talked about blowing up small trading accounts, averaging into losing trades, impulse trading, revenge trading, anger trading, moving stops, not using stops, taking on too much leverage. One of the best things that I learned was to take a loss. We talk about Peter Brandt and studying geometric asymmetrical risk-reward patterns. Schaubacher's book, if you haven't got that, get that book. Brent Penfold's book, listening to Brent talk about, becoming the best loser possible. I gave that lip service, but when you start to apply that to your trading, as soon as my trade goes in, if it's on an hourly system, I know it's my maximum stop is 15, 16 pips to 25 maximum. And the reason why I know that is that my stops are 1 bar. And my stop goes in right away. As I've talked about, it's easy to come back from a 1-hour loss. It's hard to come back from a 5-hour loss. And oftentimes as retail traders, the reason why people blow up trading accounts is they reproduce those same errors that losing traders make, and they'll hold on till it hits the maximum pain point, which is usually when it blows up a certain chunk of their trading account, and then they'll hit the uncle point and get out of the trade. But at that point, they've not only done financial damage, but they've done psychological damage. It is imperative that you always use a stop loss. You can bounce back and come back and be ready to trade again when you take a 1 hour loss, especially if you're getting 3, 4, 5 hours on your profit trades. Number 5, focus on the price. One of the things that I've learned, you can have a couple of indicators on your charts to give you an idea in terms of market bias or market direction or momentum. But one of the most important things, especially in Forex, is that supply and demand, selling support and resistance. The markets will often, indicators will often lag price, but they'll draw traders into support levels, or they'll draw traders down into demand levels, especially at the critical times of the day. So Asia may start trading, and it may draw traders with trend indicators into the London Open, but it's a supply zone, and the market will heavily sell down, stop out those traders, not only for losses, but perhaps again if they've entered into these trades without stops, or they've, revenge trade, whatever it is, little things like that. It's really critical to focus on price. And what I mean by that is that you can still use indicators if they're working for you, but when you focus on price, then you can start to see rectangles, geometric shapes where you can be potentially buying low, selling high, or selling high and buying low with measured moves and range expansions. Often with indicators, they may pick you up late, but also take you out late as well. That's just one of my opinions. Focus on price. Number 6 ties in with always use a stop loss, but money management. Again, if you're taking, you may be taking a 1 hour loss, but if you're not following correct money management rules and you're averaging, your leverage is too high, you're still going to have a risk of ruin above 0, which means that you're en route to blowing up your trading account. So it's critical again that you have some kind of consistency in your money management and in your stop loss, because again, if we talked about this in one of the other videos, if you can keep your losses consistent, even if your profits are inconsistent and they're greater than 1 hour, you're still going to be ahead of the game. But if your losses are inconsistent and your profits are inconsistent, then you're probably going to be either break even or losing ground overall with your trading. So again, money management, whether that's 1%, 0.5%, 2%, whatever it is, try to be consistent with that. You may do a sample size, you might do 10 trades and then bump that or change that and readjust it, but try to keep your losses and your money management consistent. Number 7, discipline to do all of the above. Now we talk about, all these things. The business of trading is actually really quite simple. But as retail traders, we're bringing a lot of stuff to the market in terms of our own baggage. You may be trying to replace an income or create employment for yourself, and so you feel like you need to be earning money every day, which forces you to make trading errors, impulsive trades, or maybe too aggressive, too much leverage, all these types of things. Ultimately, the market doesn't care about your personal situation. It doesn't care what color you are, what religion you are, what school you went to, what your sexual orientation is. It's irrelevant. That's the greatest thing about the markets. It's the ultimate game in the world. It's, the biggest opportunity in the world. But with that comes the respect that it deserves. And at some point, if you don't have some consistency to your trading, especially in your capital management and in your managing your losses with stops, at some point the market will punish you. It's inevitable. So it's really critical that the discipline needs to become unconscious through your unconscious competence, where it doesn't take effort to follow this because you're not attaching the outcome to every individual trade to your hopes and dreams. And so that's really critical, to have an emotional orientation when you come to the market, have a reasonable expectation on your trades, have an idea of where, if you're intraday trading, where that trade should be exiting, or if there's price action indicating that you should be exiting the market. Don't worry about what your P&L says. Worry about flawlessly executing your trading plan. If it's end of day, the same thing applies. Focus on flawless execution of your trading plan, the 3 M's. Your mindset, your emotional orientation, your methodology, executing your entry, exit, stop loss, your trade management, and your money management. So hopefully you got some value from today's video, traders. Go over and review your process, your trading plan. You know, if you're not using a journal, start journaling. If you've been using Edgewonk, if you haven't, get the free trial. It's absolutely brilliant. That's part of why I'm even trying to simplify things even more, so it's easier for me to track and monitor my metrics, so that I'm not getting all this random sort of data that actually isn't correlated specifically to some consistency in the types of trades that I have. But the Edgewonk software will, you know, all professional or prop traders have access to some sort of software that gives them metrics on their trading. Edgewonk is probably the most powerful tool that you can use as a retail trader to help improve not only your trading performance, but your own state as a trader in terms of your emotional orientation, your preparation, and your daily routine. So stay disciplined, traders, stay focused, stick to the basics, keep it simple, and may the markets go with you. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.